Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, retirement specialist and six-time author and fiduciary, Tony Walker.
Over these past 40 years in working in the financial trenches, the one thing that I've learned is this. When it comes to being successful with money, first, in order to sleep at night and worrying less about your money, you have to know thyself, which we talked about in great detail last week in discussing something I created years ago called the 3 personalities of money, a theory I've used in my practice to help savers know who they are and which products to utilize in retirement that are more suited to their financial personality. The second key to a successful retirement is making sure you have your retirement plan in writing so that you and your advisor, assuming you have one, can follow along together and remain on the same page not just when you retire, but all the way through retirement. Those are the 2 major keys to a worry-free retirement, knowing how you are wired for money and risk, and secondly, having that written game plan so that someone can help you monitor things throughout retirement, which is why today I'm going to focus on my most recent book, The Worry-Free Retirement Process, and how this book will allow savers to see not only the philosophy behind the worry-free retirement, but just as important, how we at Tony Walker Financial are so unique to the financial world in guiding you through this process. So, let's get started. Well, welcome, folks, to the Worry-Free Retirement. And yes, I am that little man in the sweater vest, the author and creator of the Worry-Free Retirement and full-time fiduciary, Tony Walker. And before we take a deep dive into my latest book and how it can help you in your journey of being worry-free in retirement, let me introduce 2 young lads who faithfully take this journey each week with me in producing this show, America's favorite financial sidekick, Mr. Aaron Orander, along with Louisville, Kentucky's most laid-back graphics artist, Mr. Derek Hudson. So, how has this book, The Worry-Free Retirement Process, not to be confused with my first book written some 20 years ago called The Worry-Free Retirement, how has this book been instrumental in assisting savers with their plans for retirement? Well, first, it assumes that the majority of people are definitely savers, those people who are more concerned with the return of their money as opposed to the return on it. Second, it lays out which financial products and strategies fit the financial personality of those folks we work with, which are savers. We don't work with investors and speculators, and there's a reason for that, so you're going to find out more about that today. So buckle up, because if you are that saver who is wanting to create a safe and simple game plan that you can rely on in retirement, I'm going to show you how we at Tony Walker Financial can literally help you just like we've helped thousands of other savers. So stay tuned. I'm Tony Walker. We'll be right back.
Did you know that you can watch the only show in the country dedicated to helping savers worry less about money anytime you want? The show's called The Worry-Free Retirement. It's hosted by Tony Walker, and it's available on YouTube. All you got to do is go to youtube.com, and right there in the search bar, type in Tony Walker Financial, and you'll see Tony's smiling face. Click on that, and you're going to find all types of video content. Again, that's youtube.com, Tony Walker Financial.
Who can you trust? It's one of the most important decisions you'll have to make. Question is, are you ready? Well, we're here to help at Tony Walker Financial. You know, we care more about you than we do your money, and we have over 2,000 happy clients and an A-plus rating with the Better Business Bureau to prove it. Rolling over a 401k, confused about Social Security, maybe you're afraid of running out of money. Learn how to use and enjoy and protect your hard-earned money. Log on now to TonyWalkerFinancial.com and let's get started. Is the person you're getting ready to turn over your money to a fiduciary? In other words, is that person required by law to work in your best interest? Well, if not, why not? My name is Tony Walker, and as a fiduciary, I promise to work in your best interest. So before you turn over your life savings to anyone, make sure they're a fiduciary. For a second opinion on your finances, give us a call at 877-499-9255. Interesting, as we record this show in December of 2024, how many people have retired early as evidenced by this particular article. But now what's interesting about this article, and we've seen this too, more and more people are retiring sooner than they planned on retiring for various reasons. But in this case, it says that only 1 in 5 that retired earlier truly felt financially like they were able to do so, which, if I'm doing my math right, about 80% of people then feel like they don't have enough money to retire, but they went on and retired anyway, which is scary stuff unless you have a game plan. In addition to that, we got all this potential risk out there, and with the market flying high, many people, in my opinion, who are savers, who are retired or nearing retirement, still have way too much risk, or they're trying to time the market and figure out when to jump in, when to jump out. Again, this is not a good thing for savers who are trying to follow a game plan. And to talk more about this issue of timing the market and whether you get in or whether you go out, I want to turn it over now to fellow fiduciary Wes Walker to explain more about this.
So in talking about this subject, in timing the market, what people try to do is they'll remain in cash for a given period of time, and then they'll jump in to marketable securities like stocks or bonds when they think that the environment is good to make those decisions. The opposite is true as well. They might be holding the stocks and bonds and jump to cash when they think that the market's about to crash. Although this strategy pays off for some, it does not pay off for all and has the inherent risk that simply the person is wrong. What we're able to see from the Schwab data that's given from this study is that those who stayed fully invested in bear markets performed much better than their counterparts who tried to time the market at different stages of the game. It's important to remember that there are investment professionals who are paid millions of dollars on Wall Street, and they don't even get this right most of the time. So to try and do it as a retail investor without insider knowledge or knowledge of securities generally is definitely a fool's errand. If possible, always try to stay within the bounds of your risk tolerance and stay invested in the market until it makes sense to maybe get risk off the table when talking with a fiduciary.
All right, now back to this book, The Worry-Free Retirement, which again is available for a free download if you want to download the audiobook at TonyWalkerFinancial.com. Really good book. But basically on page 60, let's take a look at this, Derek. You can put up this graphic. This is a cool graphic. Basically, to keep this real simple, there's really 2 halves to investing. If you'll notice on the left side, if you're looking for safety, these are the products you would want to select. Fixed interest and fixed indexed annuities, CDs, money markets, and basically cash. Those are very, very safe investments, but usually don't provide high returns. So some people feel like, well, gosh, I want to try to get some money on, some growth on my money. Well, that means you're going to have to go over to the other side, which is things that contain risk. Things like bonds and mutual funds and ETFs, variable annuities, and of course, stocks. Now, way over here, you might put gold and Bitcoin. Those are a little more speculative. But basically, this is the continuum of money. The farther you go on the left side for safety, the more potential growth, but also you may not get returns, as we've seen some fixed indexed annuities have done rather poorly, in my opinion, during this tumultuous upward and downward market. But again, at least the principle's safe. You come over on this side, the more risk you're willing to take, the more possibility for growth. So what do we do at Tony Walker Financial? How do we use these products to help our saver clients determine if and how much risk they wish to take? Well, when I come back, I'm going to go over something that's really interesting. We're going to simply talk about this side of the ledger, and with our Charles Schwab platform, how we can show a variety of different patterns and risks that you might wish to take as you take this journey into retirement and utilize this money and use and enjoy this money before it's too late. Stay tuned. I'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today. You know, Heather, I think back to 2006. Is that when you started? Okay, I think I hired you for like tax planning. Was that your title then? Something like that.
It was financial research coordinator, I think. It took me a minute to think of that.
Well, I've been in the business so long up until then, and I understood the need for tax planning, but we really didn't have any strategic plans. We didn't have a department. Speak to, as we fast forward now to 2024, our tax planning department and the role they play behind the scenes. I don't think people realize how much work they do, but the importance of the role they play behind the scenes at no additional charge. We don't charge for these services, but for our clients of Tony Walker Financial.
Right. I think you originally hired me, like you said, for essentially some tax planning. I had a background in accounting. Right now, our tax planning department consists of TJ Reagan and Leanne Tinsley, and there's so many tax issues in retirement. I think people are just like, oh, you pay your taxes. But it does change with retirement in between required minimum distributions, possible Roth conversions, legacy planning, estate planning. There are so many issues that are involved in your retirement as far as taxes go. And to have two full-time people on staff that can answer those questions, and they work, as you mentioned, they work behind the scenes. There's a lot of tax planning inside the plans that we present to potential clients. They may not see that initially, but it's in there. And because we're trying to be proactive as much as we can on tax issues that may come their way.
And then also, I think what a lot of people don't realize, I had some clients, prospective clients yesterday, they're moving forward. And the lady, she was so funny. She said, so make sure I understand this. Really what you're going to be doing is taking over the paycheck we were getting. You're taking all the taxes out and all that. So speak to our tax planning department, too, how we hone in. Not only are we just going to send them money so they can continue to enjoy retirement, we're also doing all the calculations, the withholdings, all that. How does that process work?
Yes. So that's one of the things we do even look at when we're preparing a plan, especially TJ. He does look at what we're projecting income to be. And then based on current tax brackets, of course, we can try to guess at future, but good luck. But then we look at those tax brackets that they will be currently in given projected income. And also that will factor in if we're looking at Roth conversions, trying to stay within their current tax bracket and things of that nature. So it's a great service to have, and not every advisor has that ability to do that.
Looking for an advisor you can trust? Schedule your free phone call with Tony at TonyWalkerFinancial.com or call 1-877-499-9255. And now it's time for Tony in the Trenches. Our Tony in the Trenches comes to us from Russ in Cox's Creek, Kentucky. Tony, I just received my game plan from your offices and must say I am truly impressed. As someone who understands the value of time, I've got to ask, how long did it take your office to put this plan together?
Welcome back to the Worry-Free Retirement. And before we answer this TNT, this is kind of interesting. On page 48 and 49 of the Worry-Free Retirement Process book, which we're featuring today, that I wrote recently, this gets into the Charles Schwab bucket specifically. So we'll come into that in just a second. But let's first answer this TNT. So this is a great question. Someone has gone through our process, especially those who have worked with other advisors or so-called planners, and they see the amount of detail we have, and this is their reaction when they see our game plan. So what I thought I would do is just take us through a timeline. Now, it varies depending on the complexity of the case I'm working with, but we're going to kind of go through a timeline of how long it generally takes us from start to finish, from the time I meet with someone until the time that they decide to do business. So let's take a look at this full screen, Aaron. Okay, first of all, there's the first initial meeting with me. In almost all cases on a first appointment, if somebody responds to a request to meet, they've seen the show, they've seen an ad, they're going to meet with me in person. And generally those meetings last 30 minutes. So there's 30 minutes right there. Then I'll take that information, if I think that can help them, to put into our game plan, and I do a review of their situation and lay out the game plan first before turning that over to the income planning department. Let's put another 30 minutes up there, Aaron. So now we've got an hour into this thing. Then we meet with the income planning department, and I have to explain the plan to them because they in turn are going to put it in our proprietary software. Well, let's put another 20 minutes on there. So now we got an hour and 20 minutes into this. This again before we've actually done the plan. So then Lisa Allerkamp, who's in charge of our income planning department, will delegate all of the different things that go into the plan. And generally, on average, I've asked Lisa, I said, how long does it take you to do a plan? And she said if it's fairly complex, it will take us 3 to 4 hours just to put the plan together. So let's say 3 hours. So now what is that, 4 hours and 20 minutes or whatever? And again, folks, we haven't even presented the plan yet. Keep in mind, if you qualify for this service, this is absolutely free and there's no obligation. So then I meet with them a second time. I usually spend 30 to 45 minutes with them going over the plan. So we'll add that to the mix there, whatever we're up to now, Aaron. Then they usually take that with them because we want them to study it, make sure they understand it. In many cases, they'll follow back up with our office. Usually they'll talk to Heather Hughes, who's kind of next in the chain of command in terms of fiduciaries that I like to talk about and also talk about the plan. They might spend 20 to 30 minutes with Heather, and then they say, all right, we're ready to move forward. So what do we got there? 5, 6, 7 hours we've got into the plan before we've even done the overall plan. So what happens next? We move all the money over. That may take our time an hour to 2 hours to get everything moved over. Again, we're doing all this with no upfront out-of-pocket costs, folks. And then here's the beauty. They become a client. All of the monies arrive at Tony Walker Financial, and we put together this wonderful, what we call binder delivery to explain the reaction. In fact, it was Trey Jurgens who actually met this fellow that got this reaction of the binder delivery process. I'm going to turn it over to my favorite son-in-law, Trey, to describe how this process works.
Yeah, so the binder delivery appointment is kind of the final appointment in our process. It's really the culmination of all of our planning. It's when all the accounts are established, funded, all the annuity contracts are ready to be delivered, and it's really kind of ties the bow around the whole thing. So it's not uncommon to hear a wow in those appointments. This client actually really understood the time and the attention to detail that went into it. So that delivery appointment, like I said, is kind of the culmination. And for most clients, it's the time that their finances have probably felt the most organized in their life.
Okay, we're back to talking about the Worry-Free Retirement Process book. And in the time remaining, I want to kind of go over this. This is pretty cool. That's the split IRA, okay? And we're talking about that particular bucket, the Charles Schwab bucket. And what is this exactly? How does this work? So let's kind of go through the three different, these are the major, we've have different strategies. These are three of our most popular strategies. Here's a statement of somebody who actually has all three strategies. And you can tell that there's different things that will happen within these strategies, depending on what? Depending on how much risk they wish to take with their money. So not everybody will do this, but this might be something you may want to consider doing. So forget the annuities a minute. We've got the annuities locked in place for safety, security, mailbox money. They're already locked and loaded. They're not going to lose any money, okay? Those are the annuities, but they're not as flexible, the annuities. They probably are not going to earn large rates of return. That's not what they're for. What the Schwab bucket is for flexibility, the ability to get money out anytime you want without penalty, and we do all of this in-house. We even do all the trading, folks. Very few people offer these kind of services, and currently these fees are some of the lowest in the industry. In fact, if you want to see more about our fees, you can download Form ADV Part 2 at TonyWalkerFinancial.com, and it'll disclose exactly what our fees are for the Charles Schwab platform. But let's look at this a minute. So let's say somebody says, well, Tony, yeah, I don't want to do anything with those annuities yet. I want those for safekeeping, but I need some income now. How's that going to work? Well, if you'll notice, we would take money first out of the conservative bucket. The conservative bucket would be short-term bonds, maybe a little bit of equities, not much. Again, we manage all this. It's meant to not take a lot of risk because this is the money you probably are going to need now. Folks, if you're going to be taking out money pretty soon, you don't want to have all that money at risk because if the market tanks, well, it's going to be difficult to take money out at a loss, or at least you may not want to do that. So the conservative bucket is drawn out first. Now, what happens is, in theory, again, this can be a little risky, but the moderate bucket then has been growing over time. You see what's happening here? Because we use the conservative money first. As the moderate money goes up, Actually, this illustration doesn't show this. What we would do is we'd move more of the moderate back into conservative. Notice the growth has grown. Again, in theory, it could go down, but in theory, the growth has grown. We would move some of that down into moderate. So what we're doing internally, what we're managing, folks, is a process. We're not trying to time the market. We're not trying to throw all your money at risk. In this example, this person had 3 different strategies with Tony Walker Financial within the Charles Schwab, and that's what we're managing, is the process of overseeing the money, getting it to you at the least amount of cost, and then also with our tax planning department, we're managing all the tax ramifications of this at no additional charge. Most people don't do this. In fact, the other day, someone came to me and they said, Tony, I got a broker. He's a nice fella. Well, we're not doing any retirement planning. He won't do any tax planning. I need a plan. And maybe that's you right now. That's fine. You've been growing your money and you've been accumulating money, but now you might be at the point where you want to spend and enjoy some of this money without taking all this darn risk. Well, that's you. We need to talk. And we've made this so easy to do. In fact, we call it the free 10-minute fiduciary phone call. So to take advantage of this free service, just log on to TonyWalkerFinancial.com. Go and click that little Let's Get Started button or call us anytime, 24/7. That's right. We've got operators standing by, even if it's at nights and a weekend. Just tell them you want to set up that free phone call by calling 877-499-9255. We'll be right back.
Hi, this is Craig at Tony Walker Financial. I'm the rollover specialist here at the office, and here's a common question that we receive. One of the common questions we get during rollover calls is this taxable? Because there's a movement of money involved, people want to make sure that they're not paying extra taxes on their life savings, especially when they hear that they'll be receiving a 1099 to file with their taxes next year. But you can rest assured when moving money from a pre-tax account, like a 401k, to an IRA, or if you're rolling over your Roth or after-tax funds to a similar account with Tony Walker Financial, you will not incur tax penalties for that transaction. Rolling over your funds can be a little bit complicated, and it does involve some questions you may not have encountered before. That's why we are here to help. If you have questions, just let us know. You can email me anytime, Craig@TonyWalkerFinancial.com.
Looking to roll over your 401k? Then log on to TonyWalkerFinancial.com and learn just how easy it is to roll over and safeguard your 401k. Do it today. Welcome back to the Worry-Free Retirement. Tony Walker here, along with my favorite son-in-law and fellow fiduciary, Trey Juergens, and my favorite nephew and fellow fiduciary, Wes Walker. Greetings, gentlemen.
Yeah, hello. Thanks for having me.
Good morning, Tony.
Thank you for being with us on such short notice. But kind of wanted to, I was touching on in the radio and TV show previously this idea of why we use the Schwab bucket. And primarily, I mean, it's obviously some people want to make it for growth, but primarily it's a distribution bucket, if you will. So maybe speak to that a little bit, Trey. You know, let's say somebody meets with me, they're ready to move forward. As I say, I like to take them down the hall to see you. And in some cases, they're not fully ready to commit to one of our strategies necessarily. So how do we handle that? And then when we get them on board, talk about the distribution process in general.
Yeah, so obviously a lot of work goes into these game plans, and we throw a lot at them. There's a lot of paperwork. We don't necessarily have to commit to deciding how that money's going to be invested right away. Sometimes we, as we say, park it in money market, something that earns a little interest while they can consider, let the money transfer, get everything set up. If they're ready to start taking distributions, we may choose something a little bit more conservative. If they have a little longer time horizon before they need to take money out of Schwab, we may invest that a little bit more aggressively, really just designed around what they're comfortable with. But sometimes if they're not ready to make a decision, we'll park it, schedule another appointment, and talk about it more in detail.
And that is important, I think, because sometimes, you know, we're going through the process and they think they have to do everything immediately. Once the money moves over, it is parked. But then speak to also, I think when you came in here before we recorded this, you started talking about the number of distributions and how that fits in with why we select sometimes more conservative accounts depending on their distribution needs.
Yeah, so unlike a lot of advisors, we're big on them using and enjoying their money. That is the live well, die broke philosophy says. I looked up this morning, we have nearly 500 accounts with a systematic distribution. So monthly distributions, money that's going right back out to these clients.
So let's say we've got roughly 2,500 accounts or so with Schwab, so 500 of them have monthly distributions going out. That's pretty amazing. So let's talk about that. So now, Wes, you're a little more in the planning end as far as where we're selecting these investments and managing the strategies. Of course, you talk to a ton of people regular who are calling in, wanting to know about their allocations, distributions. Speak to that a little bit in your role in that process.
Sure. So if somebody is taking regular recurring distributions from a Charles Schwab account, this might be early in their beginnings with us when they're first starting out. We're starting to send them money from Schwab before we turn on income from an annuity. We might be sending those payments. If we're going to invest that money from an investment perspective, we should use relatively conservative asset mixes. So what that means is we'll probably have a very small allocation of stocks, if any, and then we would use very low duration, short-term fixed income. We don't want the fixed income portion of it, the bond portion of it, to move around a whole lot based on interest rates. We just want to be able to send those monthly payments with fair regularity and not have a lot of volatility. On the other side, if they're investing the money for growth, we'd probably have a larger allocation to equities, more stock market exposure, and maybe even some longer duration fixed income.
Have you seen, we've got a few people, but I think the majority of people, unless they just don't need the money for a while, though, we do split it up, don't we? I mean, how many people would you say are really in growth? And if they are in our growth strategy, let's say, what percentage of their assets is usually there? Do you have a ballpark figure for that?
Well, not exactly sure on how many people are in growth. If they're in the growth strategy, they would have a 70% allocation to equities in that one account. But again, they might have an account that's conservative, so 20% to equities. That's their need money now bucket. We're sending them money through that channel. They've deferred the other bucket in growth. We're letting that fester and grow and hopefully turn into a bigger number because they have a longer time horizon for it. And a lot of clients will split up their asset mix like that. An important point, too, is that they're afforded the ability to take that exposure to equities because they have income annuities on the back end that will never run out of money. So they've got almost an insurance policy against running out of money. It allows them to put more money aside to hopefully grow it.
Yeah, and you mentioned that, Wes. We've been featuring our book, The Worry-Free Retirement Process, which again, folks, if you're just now joining us, we have a free audio download of this book available with several of our books, actually free audio downloads at TonyWalkerFinancial.com. TonyWalkerFinancial.com. I'd encourage you to download this book. It's really a good book. But speak to that a little bit, Trey. Wes touched on our 4 needs of money, we call it. Money you need now, money you need later, money you might need now, and money you might need later. And again, back to how that fits in with our Charles Schwab bucket specifically.
Yeah, so the Schwab bucket, the money you need now, you need liquidity and access. That's something Schwab can provide us. Say the money you might need later, for instance, in some of our planning, it's a Roth IRA. Within Schwab, a lot of our clients that have Roth IRAs, the time horizon of needing that money is way out, say 2 decades, or maybe not even at all. That's money earmarked to leave to their kids. So
they might need that later, but more than likely they won't.
Correct. They may need it later. They may need it for a large one-off where they're trying to avoid some tax issues. But really, it's probably a legacy bucket that they're planning to leave to the kids. So they might need it later, but they don't need it within the next 5 to 10 years. So they may put that in our growth strategy or be more aggressive with it.
Wes, your thoughts on that?
I think this is where someone who's really trained in the world of retirement planning can add some value, because if you were doing this on your own, you might make the mistake of, well, let's invest the pre-tax money in very aggressive investments. We'll try to grow that and then leave that to the kids. Well, then you're just leaving them an account with a big old tax tumor on it. They'll have to pay taxes in the future. Really, ideally, if you can give them after-tax money through a Roth IRA, like you mentioned, Trey, or a non-qualified brokerage account where they get what's called a step-up in basis, and they don't have to pay taxes on the gains. Those are much more tax-efficient vehicles to leave money to kids rather than IRAs. So that's where our planning focus can kind of add a little bit of value.
Mm-hmm. Well, that's a really good point. In fact, I tell you what I've been doing lately. We need to talk more about this. These smaller Roths, I'm wondering really how much utility they've got. Well, I'm having some of the people just put it in an after-tax account. Like you said, it's maybe they might need it now, they might need it later, but you don't have all the government restrictions. And as you said, at death, it's tax-free anyway. So folks, that may be you right now. You may be totally confused out there with the financial world. There's a lot of mixed messages coming your way, a lot of different advisors touting a lot of different strategies. But here's the point. If you're a saver, and you're getting a little confused as to what to do next, you don't have an advisor who feels in your corner, you don't have this access and liquidity and somebody really watching over things, why don't you give us an opportunity to talk? It's easy to do. We call it the free 10-minute fiduciary phone call. Just log on to TonyWalkerFinancial.com or give us a call anytime at 877-499-9255. Well, gentlemen, thanks for joining us. And folks, thanks for joining us. Until we see you next time on the Worry-Free Retirement, you remember, between now and then, if all else fails, you be worry-free and make it a good one.